the Donaco position is a derivative of what we've played in Macau. So we've been invested in the Asian gaming story for probably 4 or 5 years now, and what we saw with Macau was really two things driving the market. One was the gradual improvement in infrastructure over time that basically brought the players to market, and that's continued to improve year in, year out, and it's going to continue to improve for the next decade. I can go up to Macau now and I can sit at the Gong Bay border crossing, which controls the bulk of the flows from mainland China, and on a Thursday night, which is the peak period, I can still wait for 2 to 3 hours. So there's still a lot that can be done in terms of people accessing the market. So that's one thing, infrastructure. And the other one was the ability for these players versus market expectations to basically improve the yields of the underlying table. And over time they're able to do that as working capital improves, as you start to better utilise your players and your table structure, etc., etc. So we saw both of these things impacting a lot of casinos across the region. The interesting thing with Donaco for us was it was backdoor listed into Take-Two Interactive, and for the very first phase, a lot of people still thought that was the Take-Two Interactive business. I spoke to a lot of people about Donaco and that Take-Two Interactive business. So for us, it was very early stages when they still were basically a casino that had eight tables and 32 rooms. And for us, it was about getting comfortable with the ability to basically expand that casino. So in the initial stages of our investment thesis, it was how comfortable we were that they were going to be able to get 40 tables with our license. The actual fact was in our models we had 25. And now it's come to the point where they've got their new casino up and running. They've essentially spent $60 million on that project. And for us, what we're looking at now is the ability for them to do similar things to the Macau operators, not at the same scale, but basically expand that asset over time. So one, we're looking at the ability for people to get to the facility, and we're looking at the ability for the operator, so Donaco, to basically improve those table yields over time. So the market's looking at 5,000 US per table per day, and what we're basically saying is that over a 3, 4, 5 year period, we think when you come back, if you look back in hindsight, you're going to say expectations for 5,000 were way too low, and that's based on what we've seen happen across a lot of markets throughout Asia, and particularly what we've seen happen in the Macau market.
So geopolitically, there's been a few events that have probably clouded how people view Donaco of late.
Yep.
Can you talk to me about how you see those events, particularly with the tensions between Vietnam and China?
Yep. The South China Sea issue is one that's been bubbling away under the surface for years. I've looked at the offshore oil producers in a lot of these markets, and one of the consistent things they're always talking about is those geopolitical issues. But when I sit back and look at how that impacts these businesses over a longer period of time, yes, in the short time periods, in the 1 month, 2 month quarterly results, it is going to impact flows of people coming across the border to Vietnam. There's no doubt about that. The question is that going to have a sustainable impact on visitor flows over a long period of time? And I think if you go out and look at it over a 5 year period, I think what you'll find is that visitation from China in 5 years' time will be much higher than it is today, going into Vietnam. So you're going to have some short-term volatility, but I think that short-term volatility, people are focused on that, and they're worried about how that short-term volatility impacts, next quarters or the next half year in terms of table yields and revenues. And for us, it's sitting there and saying, do we think there's something structural in terms of visitation? Do we think the Chinese government's going to close the border? The answer to that question is no. If we thought that was going to be the case, we wouldn't be invested there. I'm going to be looking at a couple of things. I'm not going to be looking at the table yields, because to me, the short-term table yields aren't going to say a lot. You've just gone from basically 8 tables to 40 tables, and you're basically going to see your table yields come down. And that's also been at a point where basically you've had this heightened geopolitical tensions. So for me, I'll be looking at their ability to extend their junket relationships outside of Yunnan province. I know they've been working on things in terms of trying to tie up with people in Shanghai, Beijing, and also some of the Macau junket operators. So if I can see progress on things happening there, I'm going to get a lot more comfort on their ability to basically drive visitation to the casino. I look at two parts to this story today. You've got the casino. And if I think it can earn 6,500 in table yields on 40 tables on a similar multiple that the other Aussie listed casino players trade at, then $1.50 is kind of reasonable in terms of the valuation. And then you've got the cash. So the cash today is basically, if you don't include the buyback, they're sitting on about $110 million in cash on the balance sheet. So that's another part to that story. But what I look at when I'm thinking about the valuation is, okay, that's my base case, but there's a lot of upside to that over the long term. Their ability to, and this is the things that people need to factor in, their ability to go to potentially 80 tables, their ability to put in another hotel tower, their ability to go out and acquire another casino, which is something that they'd be looking at. So when I'm looking at the valuation, I'm fairly comfortable that the current operations at 40 tables, the cash and table yields at around 6.5, $1.50 is a price I'm happy to pay.